Welcome to Breakout Swing Traders for the week ending November 30th, 2025. Here is a recap of all of the stocks and ETFs that we have been tracking. As always, the focus here is on the technical structure, support, resistance, and the patterns that form around them. We'll start with AT&T. I'm drawing out the support and resistance zones first, because these levels help us understand where price has reacted in the past. Support highlights the areas where previous declines slowed or reversed, and resistance marks where upward momentum has struggled. These levels don't predict the future, but they give us a map of how the stock has behaved historically. Now I'm labeling the breakout zones. A breakout happens when price moves outside an established pattern and shows a potential shift in momentum. In AT&T's case, the first breakout appeared at the beginning of November after almost 2 months of downward movement. Since then, the chart has been showing signs of steady upward pressure. Breakouts inside this structure would simply indicate continuation within the current trend. When we switch to the 15-minute chart, the picture becomes clearer. You can see the price consolidating inside a tight upward wedge. Consolidations like this show a balance between buyers and sellers, and eventually the market decides on a direction. If the uptrend continues, that wedge could resolve to the upside, but we'll continue watching how the structure behaves. This is one of the positions we're currently tracking. Next up is Walmart, ticker symbol WMT. When we draw the support and resistance levels here, you can see a consistent upward trend forming within a relatively tight range. Each blue arrow marks a breakout, points on the chart where price pushed out of a previous pullback and signaled a possible shift in momentum. Zooming into the 15-minute chart gives us a precise look at when the most recent change occurred. The breakout from the downtrend into the new upward move becomes much clearer at this level. Watching how price behaves around these turning points helps build a clear story of the trend. Now let's take a look at Chipotle. CMG recently broke out of a months-long downtrend. Whenever a stock comes out of a long decline, the big question becomes whether this is the start of a new uptrend or just a temporary move before the next larger direction develops. We're watching the structure closely, the overall shape of the breakout, the way the candles behave, and how the price interacts with past resistance, all help give clues about the strength of the move. The 15-minute chart always brings it into focus and helps eliminate risk. This chart is also part of our current lineup. Moving on to Alexandria, the chart is showing early signs of life after a serious downtrend. Trend changes often start subtly, slightly higher lows, a shift in how price reacts to resistance, or a small uptick in momentum. The 15-minute chart has broken out, and trading above the 200-day moving average has begun. Always place a trailing stop. Finally, let's take a look at the ARK Innovation ETF, better known as ARKK. This ETF holds a mix of companies involved in disruptive technologies, such as advanced software, biotech, artificial intelligence, and next-generation automation. Some recognizable names inside the fund include Tesla, Roku, Coinbase, and Shopify. From a technical standpoint, ARKK broke out of its downtrend last week. This structure suggests a possible shift in momentum and stands out as one of the cleaner breakouts in the ETF space recently.